We remain on top of it on the portfolio, and your host is Cliff Ayozie. Of course, it's good news for Nigeria's economy as the National Bureau of Statistics latest release indicates that the economy is on a trajectory of growth, on the path of growth, with a GDP growth rate of 1.40%. And that's good news for our economy. That means our target of over 2% or 4% growth will be achieved in the course of time. That's just for third quarter of 2017. What will happen in the last quarter? We're yet to see. When we'll keep trend of that, keep touch, and make sure that we keep you informed of what is happening along that line. Also, we know that the inflationary rate also dropped for the 9th month. These are all positives for us. But all that government is really working in the area of checking challenges in the ease of doing business. And of course, we celebrated the Africa Industrialization Day. And of course, that brought attention to what is happening in the area of the national Nigeria's industrial revolution policy. And of course, government is thinking along that direction now, with power also being tackled to ensure that we have enough power supply to the populace. But also on the other perspective, the International Monetary Fund also released the regional economic outlook with a lot of positives for Nigeria. And of course, we'll give you such highlight of that development, that presentation made by the country rep of International Monetary Fund for Nigeria and other developments around there. Also, bridging the gap of funding for micro, small, and medium enterprises, the Development Bank of Nigeria, beg your pardon, is engaging in a strategic partnership with micro finance banks and, of course, development deposit money banks, I beg your pardon. And that is what is trending so far. But what we need to talk about, a whole lot is happening in our country. And we'll continue to keep you abreast of these developments on the portfolio. But our main focus, we shall bring you high point of the regional economic outlook as presented by the IMF. And of course, other developments will follow.
Activities in the oil markets have slowed down ahead of an OPEC meeting at the end of the month, when the producer club is expected to decide whether to continue output cuts aimed at propping up prices. The Organization of the Petroleum Exporting Countries, OPEC, together with a group of non-OPEC producers led by Russia, has been restraining output since the start of this year in a bid to end the global supply overhang and prop up prices. The deal to cap output is due to expire in March 2018, but OPEC will meet on November 30th to discuss the outlook for the policy. OPEC is expected to agree an extension of the cut as storage levels remain high despite recent drawdowns, although there are doubts about the willingness of some participants to continue to restrain output. Brent crude future is the international benchmark for oil prices, and it sold for $62 a barrel on Monday. Nigeria's gross domestic product GDP grew in the third quarter of 2017, according to the National Bureau of Statistics, by 1.40% year-on-year in real terms. This is the second consecutive positive growth since the emergence of the economy from recession in the second quarter of 2017. This growth is 3.74 percentage points higher than the rate recorded in the corresponding quarter of 2016. In the quarter under review, aggregate GDP stood at over 29 million in nominal terms, higher when compared to 26 million in the third quarter of 2016, resulting in a nominal GDP growth of 10.98%. This growth is higher relative to growth recorded in the third quarter of 2016 of 9.51%. In the period under review, oil production is estimated to have averaged 2.03 million barrels per day, 0.15 million barrels higher than the revised daily average production recorded in the second quarter of 2017. Nigeria earned 69.2 billion naira from solid minerals in 2015, representing an increase of 24% on the 55.8 billion naira generated from the sector in 2014. And the 2017 consultation meeting on development cooperation between Nigeria and Germany has held in Abuja with emphasis to implement the SDGs and AU Agenda 2063 and align same with Nigeria's economic recovery and growth plan. Nigeria's delegation at the meeting was led by the Honorable Minister of State, Budget and National Planning, Mrs. Zainab Ahmed. The minister pointed out that the consultations were to further deepen cooperation between the two countries, to consider the agreement signed in 2016 and also review achievements. In his statement, Dr. Oswald, who is the Director for Sub-Saharan Africa in Germany's Ministry of Economic and Development, noted that Nigeria is an important partner to Germany in development cooperation and expressed appreciation for the long-standing fruitful bilateral development cooperation with Nigeria based on mutual respect and trust. Dr. Oswald disclosed that the German Marshall Plan with Africa, which is the cornerstone for a new cooperation with Africa, considers responsible governments and private sector-driven economic development as essential elements for the creation of a better future for Nigerians. He therefore encouraged the Nigerian government to continue to demonstrate a strong political will and uphold democratic principles, rule of law, as well as create economic structures that will facilitate investments and contribute to job creation. He explained that the German Marshall Plan was designed to support the African Union's Agenda 2063 for promoting sustainable development on the continent and therefore called for concerted effort to achieve the goals. Cooperation between Nigeria and Germany covers energy, peace and security, public health, and regional programs. And that's it on the news segment. It's over to Cliff for the continuation of the portfolio.
What is the outlook like for the region, the Sub-Saharan Africa and Nigeria in terms of regional economic outlook? IMF tells us.
Clearly, 2016 was the recession year across the region. 2017, we're expecting to see a pickup. The pickup overall is still modest, was going from a 1.4% growth in 2016, and we expect that to be 2.6% on average in 2017. Two economies explain this. One, Nigeria, big surprise. Agriculture, whichever one is better.
No, this one is better, but this one, if you want to move.
No, that's okay. So, Nigeria, one-off factors, oil production and agriculture production. South Africa is the other one, where it also had one-off factors with strong agricultural production and mining production. Those two countries have helped explain some of the big pickup that we've seen. At the same time, we have an easing of drought conditions in some of the Eastern Africa countries, which have also contributed to this rebound. But if you look at the growth projections, 2018, we have an average of about 3.5%. If we were to exclude Nigeria and South Africa, we have 5%, but that's because the Eastern African countries on average were already growing much faster. Now, is that enough? We have 45 countries in sub-Saharan Africa. Of those 45 countries that we cover, if we were to look at GDP per capita, we will find that the recovery and the growth numbers that we have are not enough. We have 12 countries out of the 45 that are seeing falling per capita GDP. That represents 43% of the population of those 45 countries, and a large part of that 43%, Nigeria is in it. So the recovery is there and it's subdued, but it's still not enough because per capita GDP is still low. And we find that oil exporters, this is the, let me use technology, So the oil exporters, you see that growth has been picked up. It was negative with the oil shock, going up at about 2% average. And the other countries, there has been some growth pickup, but on average, it's still relatively the same that what it was, between 5 and 6%. And if we were to look at, excluding Nigeria and South Africa, we would have 5%. And if you were to look at the risks to this outlook, we would call it balanced. And balanced because of two reasons. We think that external conditions are positive. We have growth in key trading partners that are turning out to be more durable. And then on the downside, well, if oil price were to go down, a lot of the countries in our region depend on commodity developments that also affect the non-commodity economy. Or if there was a tightening in global financial conditions, the outlook risk would be to the downside. Now, on inflation, developments for the region have been positive. There's been a 2 percentage point decline for both headline and food inflation. Some of it is reflecting tighter monetary conditions in Nigeria, Angola, and and Tanzania. You have some improvement also in exchange rate market conditions. There's been a spike on food. The spike that you see on food in the 2016-17 is explained also by what happened in East Africa when there was some periods of drought that also picked up inflation. Now, why growth matters? We know growth matters, but let's try to link growth and look at some of the human development indicators, which are important. In 1990, we have GDP per capita of about 2,600. Life expectancy was 50. Since then, life expectancy has increased to 3,400 as of 2015. Important progress in these human development indicators have happened also because of better access to education and health services and reforms in those areas, but it also because economic activity has been able to pick up. So we have a halving of the maternal mortality rate, of the infant mortality rate, but that's still not enough. I mean, complacency cannot occur. More growth is necessary.
In whatever thing we do, whatever policy we evolve, the exchange rate must reflect the fundamentals of the economy. And oil definitely is not the fundamental of Nigerian economy. It should not be, and it will not be, God willing. As you can see, the BDC rate is depreciating, approximating 500 naira to $1. And those who were around then would heard the hue and cry as reflected in the national dailies. The world was coming apart. The almighty naira has depreciated so badly that 500 naira would be exchanging for 1 unit of dollar. If you look at the interbank market, the same relationship holds. When crude oil production is declining and the price of oil is declining, even the interbank market, which should reflect some sort of a fundamental, is also depreciating, coming around 300 to 325 naira to $1.
The Africa Industrialization Day was celebrated with Nigeria's Minister of Industry, Trade and Investment, giving perspective what Nigeria is doing in the area of industrialization. Of course, there were other speakers from the United Nations and other stakeholders talking to the issue on how to reposition the Nigeria's growth and Africa's growth on the path of industrialization.
What is Nigeria doing to lead by example? Because it's one thing to call us the giant of Africa, the most populous country in Africa, maybe even the biggest economy in Africa. But the question is, what are we doing to lead Africa on a very important subject of industrialization, to walk the talk, to go beyond the rhetoric? And I want to tell you the things we're doing. Most of it will not come as a surprise, which I think is good news, because it means that we're actually doing them. The first is that we have a clear-cut industrialization strategy, the Nigeria Industrial Revolution Plan. We've never accepted that this strategy is easy to implement, but we think it's necessary. It's a strategy that calls for us accepting responsibility for our own industrialization by looking at the enabling environment for industrialization, by looking at the sectors where we have comparative advantage, and by having a program of action on how we roll out those sectors and implement it. And that plan is a plan we worked on very collaboratively and very closely with UNIDO. And I'm glad that this Africa Industrialization Day is another day to remind us. Some of those sectors where we are pursuing include agro-processing, metals and solid minerals, oil and gas, construction, light manufacturing, services. And in all these areas, we are making some progress. We must accelerate, we must do more, but we certainly have started the journey. Let me also say that recently we then launched the Economic Recovery and Growth Plan. And that Economic Recovery and Growth Plan, which is our medium-term plan, 2017 to 2020, again is anchored on the Nigerian Industrial Revolution Plan. It's a plan that acknowledges that in order to invest in our people, in order to be a competitive economy, in order to leverage what we call macroeconomic stability and forces for growth, that we must build out our infrastructure. We must build out our infrastructure, whether it's in terms of power, whether it's in terms of transport, whether it's in terms of rail and so on. But we must also focus on food security, agro and agro-allied industries. And then, most importantly, we must also industrialize, including the SMEs. And I think this is something we are working very actively on. That then leads me to talk about the three important initiatives that this government has adopted in support of industrialization. The first one, which has been talked about, is an acknowledgement that by far the most important step towards industrialization is creating the right enabling environment. And I define enabling environment broadly, not just in terms of ease of doing business, which is important, but also in terms of infrastructure, hard infrastructure.
We have also to recall that Nigeria is the biggest economic country in Africa. It means that Nigeria has to lead the process of industrialization, because as we agreed all, nobody can stop the industrialization of this continent. Nobody can stop the industrialization of this country. It means that we have to support the all reforms undertaken so far, as had been indicated by the Honorable Minister of Industry, the State Minister of Industry, Trade and Investment, to create an enabling environment, to create more incentives which can attract the domestic investment to support the SMEs.
Organized labor is for reindustrialization of Africa. We must add value to our raw materials. Africa has gold, diamond, we have cotton, we have crude oil. Let's turn them to finished products. We have to stop smuggling of goods from abroad. We have to stop importation. We must produce so that we can employ our people. And we're also saying that the best jobs are the ones coming from the industries, sustainable jobs that can be guaranteed, good minimum wage, good living wages, good pensions.
That, of course, opens the door for a special focus on Cement Company of Northern Nigeria.
It is the 30th annual general meeting of Cement Company of Northern Nigeria PLC. Directors and shareholders are all seated in this hall, united by their desire to see the company grow in leaps and bounds. With the chairman directing proceedings, motions for the business of the day were taken, and the chairman's remarks in print taken as presented, an indication of the enthusiasm of shareholders. Their morale is further boosted. The financial statement distributed reveals a robust financial year for the company, as it records about 1.3 billion naira profit after tax, 4% increase from the 1.2 billion naira profit posted in 2015. Cement production also rose from 395,438 metric tons in 2015 to 485,799 metric tons in 2016, indicating a 23% increase. The chairman of the company attributes these successes to a number of factors, including its expanded distribution network.
The report actually is good, it's okay, although I would have actually wanted it much better. But the most important thing now is that I think we should, more than anything, try as much as possible to see that we commission our our second line, which is going to be done, early next quarter. So I'm really pleased and very excited that this is completed. As you know, we have spent over $350 million in setting up this plant within, the last 3 years. One of the things, that has always been an issue for us, which is energy, and I keep saying it all the time. The LPFO that we have been using for the past 20 years in CCNN has always been a challenge. Now, from next year, January next year, we have invested so far over $40 million in setting up a coal mill, which means we'll be using coal to power our kiln. So going forward, the energy requirement that we need is not going to be as much, simply because we'll be using coal. That is going to be like a third or less than a third of the cost of fuel oil. So we are very, very excited. Sokoto Cement is very well located. It is bordering with Niger, which means we will be able to do quite a lot of exports. The plant is going to be producing almost 2 million tons, or thereabout, from next year. So it is quite a good thing. And
despite these strides in the year under review, the board of directors, led by Abdul Samad Rabiu, is not relenting on its expansion efforts. He also highlights the company's growth targets for 2018.
We are creating a lot of jobs. We are saving the country a lot of money. The price of cement is not really, as high as people seem to think it is, because if you consider if one was to import what it would be. And then we are creating jobs. This new plant that we are commissioning next year, early next year in January, is going to create at least 5,000, maybe more than 5,000 jobs. And Sokoto Cement, I keep telling people, look, if you look at, what we are doing in Sokoto, with the investment that we have there today, it is the largest single investment anywhere in the northwestern part of the country. The challenges are not going to be, as much as what we had before. With the energy issue, we are creating jobs, and then we are also, producing a lot more cement to the catchment area. So I think Sokoto Cement is going to be quite in a very, very good place within the next few months. So from next year, all the shareholders of this company, you see them smiling every day to the bank. That is what it is.
The shareholders, relishing the prospect, remain appreciative of the growth of the company in a particularly difficult year for the country.
Cursory look at the major balance sheet and profit and loss items detailed significant improvement in the year under review for the company. You look at the profit before income tax grew to 1.7 billion naira, which is about 12%. In a very hard year, for our economy. Then secondly, if you look at the total assets of the company, it grew also almost 14%. And if you look at the turnover also, it grew by about 8%. I think these are very, very good indices by all parameters.
The company assures of its resolve to continue to play a significant role in the Nigerian cement industry.
Amina Nojen will now keep us abreast of developments in Nigeria's capital market and other areas in Europe and Asia.
The stock market report for the week ended November 17, 2017 indicates a total turnover of 2.804 billion shares worth 54.776 billion naira in 17,792 deals were traded last week by investors on the floor of the exchange. The financial services industry led the activity chart with 2.352 billion shares valued at 8.995 billion naira traded in 9,364 deals, thus contributing 83.88% and 16.42% to the total equity turnover volume and value. The consumer goods industry followed with 178.982 million shares worth 16.849 billion naira in 4,297 deals. The third place was occupied by the industrial goods industry with a turnover of 140.570 million shares worth 27.848 in 794 deals. Trading in the top three equities, namely Sovereign Trust Insurance PLC, FBN Holdings PLC, and Dangote Cement PLC, accounted for 1.917 billion shares worth 29.875 billion naira in 2,130 deals, contributing 68.37% and 54.54% to the total equity turnover volume and value. There were no trades recorded in the exchange-traded products ETPs last week. All other indices finished lower during the week with the exception of the NSE Oil and Gas Index that appreciated by 0.85%. In the price movement chart, 20 equities appreciated in price, 43 equities depreciated in price, while 108 equities remained unchanged. European stocks declined on Friday, suffering a second straight weekly loss as disappointing corporate updates and broker downgrades provided pressure. Equities were also weighed by a stronger euro against the dollar after the greenback stumbled on news top officials from President Donald Trump's election campaign were subpoenaed in the Russian probe. In the week under review, the German DAX 30 index saw a weekly loss of minus 1.02% to close at 12.993.73 basis points on Friday, while French CAC 40 dropped 1.14% to close at 5,319.17 basis points. The UK FTSE 100 slipped 0.7% to close at 7,380.68 basis points. And that's it on the portfolio market segment. It's back to the concluding part of the program.
No doubt a lot is trending in Nigeria's economy, a lot of positives, and of course we look forward to tomorrow what will happen. And that's where we wrap up our package for the portfolio this very hour. And of course we'll continue to be aware with developments in Nigeria's economy and beyond. Well, if you have any information or inquiries, don't fail to utilize the information on your screen to reach us, and we'll be very glad to interact with you. On behalf of my colleagues that contributed immensely to the realization of this project, I'd like to say special thanks to you and always continue to share tuned. Well, I remain Cliff Ayoze on the portfolio.